Some businesses succeed not just because of a great idea but because of perfect timing. And Airbnb is the perfect case study. Launched in 2008, right in the middle of the global financial crisis, Airbnb turned an economic disaster into a billion-dollar opportunity. Today, we're going to break down exactly how market timing helped Airbnb thrive when people needed extra cash the most. In 2008, the world faced the worst financial crisis since the Great Depression. Banks collapsed, housing markets crashed, unemployment soared, and millions of people were desperate to save or make extra money. Travel spending dropped, hotels struggled, and ordinary people were looking for alternative ways to cover rent, mortgages, and everyday expenses. The Airbnb spark. Enter Brian Chesky, Joe Gebbia, and later Nathan Blecharczyk. The idea started small, renting out air mattresses in their San Francisco apartment to make a little extra cash. But the key insight was this: people had spare rooms, couches, or even floors that could generate income. And guests, especially during a recession, were looking for cheaper alternatives to hotels. That overlap of hosts needing money and guests needing affordability was the magic that powered Airbnb's early traction. Let's analyze the timing. If Airbnb had launched 5 years earlier in the booming economy of the early 2000s, would it have worked? Probably not. Why? 'Cause people weren't as desperate for extra cash. Fast forward to 2008, the recession created 3 perfect market conditions. Hosts needed money. Homeowners and renters were under financial stress, making them more willing to open their homes to strangers. Guests wanted cheaper stays. Travelers were cutting costs, making Airbnb's lower prices highly attractive. Hotels were expensive and inflexible, making Airbnb the budget-friendly, adaptable option. That's what we call a perfect market fit. The economic downturn actually created the environment where Airbnb could thrive. But timing alone doesn't guarantee success. Airbnb still struggled to convince people to trust strangers. Their breakthrough moment came when they joined Y Combinator in 2009, raising $20,000 in seed funding. And of course, their famous hustle, selling Obama O's and Captain McCain cereal boxes during the 2008 election to raise $30,000, kept them alive. Timing gave them opportunity, but scrappiness kept them afloat. During 2009 to 2010, Airbnb grew rapidly because the recession was still hitting hard. People were losing jobs, savings were drying up, and renting out a spare room became a financial lifeline. On the other side, travelers wanted affordable, authentic, and local experiences. By 2011, Airbnb had 1 million nights booked. What started as a recession survival tactic became a global movement. So what can founders learn from Airbnb's story? Here are 3 big lessons. Pay attention to macro trends. Economic downturns, tech shifts, and cultural changes often open new doors for disruptive startups. Desperation creates opportunity. When people are under financial pressure, they adopt new behaviors faster, like sharing their homes. Timing beats brilliance. Airbnb wasn't the first to think of renting out rooms, but launching at the right time made them the first to scale. Think of companies like Uber, which also grew during the recession when people needed flexible income, or Zoom, which exploded during the COVID-19 pandemic. Timing can turn ordinary ideas into billion-dollar companies. So the next time you're working on a startup idea, don't just ask, "Is this a good idea?" Ask, "Is this the right time?" Airbnb is living proof that timing can be everything. If they had launched in 2005 or 2015, their growth story might have looked completely different. If you found this breakdown useful, make sure to hit like, subscribe, and share it with someone who's working on a startup idea right now.